Good evening. This is Ken at Tortoise Capital with a daily debriefing for February 14th, 2018 for the Advanced Swing course. We're taking a look at the swing trading room. I was talking with Glenn about how to handle some of our patterns where the hourly charts for swing trading are showing the MACD histogram line crossing the zero line, so we have a long side bias on the hourly charts, but it hasn't completely made the turn yet. The 30-period regression line slope has started to roll back up, so that's favorable, but it hasn't achieved a positive bias officially yet on MACD histogram. So for that particular trade, I was recommending put a third of your swing position on with that washout pattern, and then if we get the owl follow through, that's the fourth and the fifth conditions. Then you can add the other pieces. That we get a measured blended entry and acknowledging the risk that's still indicated by risk Z. Richard provided some nice feedback on his experiences with the swing trades so far this year. 13R expectancy 0.4, SQN of 3.1. 50% win rate, average time in trade 7.2 days, 32 trades, average win 1.4, average loss minus 0.6. That's good. That's better than 2 to 1. It's 2.35 to 1. He's forward trading with prototype risk at $100 of risk per position. He observes a lot of work to do. I said, yes, you're earning a scholarship there to keep improving. I will record a more detailed voiceover of his trades, but just a real quick look. Green dots and are entries, red dots are exits. This was a adverse gap in Facebook after a Z3P pinch breakout. This is why I like entering around Z2, which would give the entry around here rather than up in here. And there's still a possibility of cashing something here, but really it's that adverse gap that is harmful. This one was a Z3 breakout in GE. This is what I'm liking the Z2 entries rather than Z3. And the collapsing dragon entry on the short side would be here. You'll see that entry if you look at the sample portfolio management. But I love this exit. This would be a pocket entry inside here. This would be the collapsing dragon entry. This would be a second pocket and a second collapsing dragon. So I like the risk management, but there are other things that we can also be looking at. The short side bias here, because of the declining slope, and the fact that MACD histogram is well underwater. XLB, good risk management, pocket, and breakthrough the RL70, collapsing dragon inside here. Nike, this was many continuations. These are all starting in January, to be fair, and the end of December, the last quarter was positive. But this pocket entry suffered an initial risk. We got to work on the re-entry, RLXT exit, and perhaps a collapsing dragon. Devon Energy, long and strong, collapsing dragon. DBC, you can see this 1, 2, 3, the PSAR flip. This is where the signal line crosses the dotted line and you're allowed to pick up a long side bias. That's slam dunk. RLXD exit, collapsing dragon short, with the target back to the long-term fair value, the RL270. Disney, the same risk management. Nice capture on Boeing. This was all part of a long continuation play. See, look how little Boeing gave up compared to other symbols. This was the strongest symbol in the Dow. This makes this a very interesting candidate for continuation now that some of the pain seems to be gone. Good risk management. Collapsing dragon entry short here. The long side bias is picked up right here. So this would be normally an entry in here. Good capture. I'm really liking the discipline, but I also want you to just take notice on the MACD histogram in terms of bias for directions. Apple, beautiful preservation. Collapsing dragon here, second one here. Tesla, there's some pocket. These are pocket entries, so you have a low, a higher low, a third higher low. So there's probably an owl pattern in here, right about here. Pocket, RLXD exit. Second pocket re-entry, so I think we can get an earlier entry here. Although I don't disagree with that entry. McDonald's, good preservation, collapsing dragon right about here. DuPont, fractional gain, collapsing dragon, second collapsing dragon. Z3P breakout, pocket reentry, second pocket. You have a long side bias this entire distance until here. And there's a collapsing dragon right here. Energy, good preservation. One thing we can look at is the degree to which this was an excessive stretch. It was really one of the sectors that had really gone beyond normal limits. When you see the dragon riding the edge of the river for so long, that's painful. But I love the exit at the VWAP flip, or I'm sorry, the PSAR flip, and you pick up a short bias right in here. So we've got to learn to respect that. And this is a perfect argument for core and turbo. That notice the size of the intraday moves and the signal to noise ratio. These are just harsh sell-offs in intraday, very powerful single direction trends. 3M, beautiful capture. XLF, these were the ones that exploited the earlier moves, and you can see how well they are aligned in the direction of the slope of the river, the 270, PSAR as a guide, and MACD histogram moves as well. JP Morgan, great capture. These are hard to let go of. You know, yeah, after this great big run up, but you see the importance of the sell discipline. Beautiful. Brazil, great capture. ILF, perfect pocket. So you have a move, pull back, and then a resumption, pocket. IWM, good capital preservation. Walmart, excellent capture and exit. So I'm really liking the exit discipline here. Technology, consumer staples. Nike, you can see pocket, pocket, pocket. Intel, nice capture. Great, good preservation. Good. I tried this same one on the utilities. You got the same exit I did. This resumption, I am in also because I just believe in the search for yield right now. So I'm talking myself into that trade. But there's a washout pattern in there. ExxonMobil, good capital preservation, collapsing dragon right about here, and that's where the short side bias picks up. Excellent exit in McDonald's. Just really admiring the sell side discipline. Lots of good lessons on paying attention to the pockets and staying strong with your supply or your supply side, your selling discipline. Here's Bob taking a look at, let's see if we can zoom in just a little bit more. Stalking options, doing option writing, and he's finding these nice, almost washout style patterns with the PSAR flips and writing options in here, and gets called away for gains while meanwhile capturing some premium. Well done. From in the chat room from a Euro session, here's Sonal capturing 320 points on the DAX. This is where she picks up the long side bias. This is where that stalking could occur, somewhere in here. But I love this entry. I love the adding the position on a Z3 breakout, adding at a pocket, first measured capture, and the cash out. Very well done. This is a little cleaner look at Bob's option right on Wolverine. I just love that color combination. There's a ethereal quality to that. Nice sideways quiet channel developing, PSAR flip, breakout across the dragon and baby dragon here on the MACD, and the signal line is crossed the EMA, and this is stalking towards that move. This is I consider a low risk trade. Looking at the market health check for today, a decisive move up, large signal day. We're up to about 6% off the swing high. Slope of the 10 is still down. The 30 has also rolled over. MACD histogram upticks. Not quite overbought yet, although if there's such a thing as easy money, it's already over. We're now price testing back into the river. Next target is the Bollinger Band mean. And I believe there will be some slowing down as people are looking to preserve that. I think, the long-term fair value is still somewhere up here around the Bollinger Band mean. So let's not get overcome with enthusiasm for the recovery and completely discount these conditions. Work continuing apace in the advanced swing workshop. The accountability partners are working through their respective goal setting templates and in their collaborative learning. We summarize some mechanical swings for them. Lots of good work inside the advanced swing workshop. We've been maintaining a daily debriefings and podcasts for portfolio management. Yesterday's included a Bitcoin case study. Been working with the soccer team. Our winter futsal season is coming to an end. The girls are departing back to their high school programs, and working with them on their mental toughness as they adapt to the challenges of the high school game, helping them with developing grit. I think there's some important lessons there for we traders as well. Now, quick run through of the daily report. Bullish volatile, neutral, risk Z. And now let's try that with today's report. Sorry about that. So for the 14th. Still volatile, still in the middle of neutral. Risk Z now has kind of bottomed out and is start getting ready to hook up. That could be favorable here shortly. A couple more days. Max Payne's, ExxonMobil, Verizon, Chevron, Merck, and United Tech. Devon Energy, ExxonMobil. So some significant weaknesses still in the energy sector. No signals channeling an overreaction because we've bounced far enough off the bottom. Dow Tactical, plenty to choose from in the auto framer. A couple 551Ws in Travelers and Walmart. Channeling here in Verizon. Big winners today. Goldman, IBM's, Caterpillar, Morgan, and Nike. ETFs, no patterns, however, plenty of auto framers. Metals and mining, big winners today. Nike, Cisco, Gold, Brazil, Latin America, above their Bollinger Band mean. The negative stretchers, ExxonMobil, Chevron, Coke. And the compressed pinch boxes, oil, Brazil, Nike. Those are on my short list along with Mexico. Lots to choose from in the auto framer. And we have a number of squeezes ready to pop. McDonald's and Boeing should be on the short list along with Monsanto. And our old friend Win. Lots of good reward to risks available there. You can see the mechanical numbers required for those kinds of frames. Oops, excuse me. Good, healthy recovery developing here. The stretch relative to the 200 starting to repair back to the long-term average. See the slope getting ready to roll up. Volatility continues unabated. The slope of that 10 period has begun to recover, although it is still more than 2 sigma below the long-term average. That's recovered somewhat back into the edge of the river. And that's everything we want to cover for today. Keep your risk measured and your powder dry. Reminder of our research weekend and live trading workshop in Kansas City in a brand new venue downtown. Looks beautiful, and we're excited to have you come join us. If you're new to us, go to our homepage at tortoisecapital.net. Make sure you download this glossary and our daily trading plan preparation and execution processes. I think that will be immensely valuable to you. Our research and live trading workshop information. Here's what you need to know. We'd be happy to have you. Take good care. Keep your risk measured and your powder dry.